1140 The Fan.
Talkin Money.
Well, alrighty then. We're back to Talkin Money with Jeff Tarbell.
All right. How you doing? Fresh off our Christmas party last night. Or should I say holiday party, which is the HR approved one, Chris? We'll go with our Christmas holiday party. How about that? Nice down at Spataro's downtown. Our company's grown by about probably 30% in the last year. Maybe that's a little bit more than it was, but getting younger by the day, which is important for all businesses, I think, is keep bringing in new set of aggressive and interested young men and women. And so usually almost every event I've been to throughout my career, I've been one of the youngest guys there. And last night, my wife and I were sitting across from a couple 30-something women that work for us, and they were being very complimentary, and one of them says to the other, "Do you know how old she is?" They were talking to my wife Kim, and said, "She's 45. Doesn't she look great?" And it was very complimentary. I looked at Kim and I said, "God, we became the old people all of a sudden there." And they're right. My wife looks like she's 30-something. Of all the things that you people think that I have garnered that I don't deserve, that's one of them. I have a wife that I certainly do not deserve, and she is very special and very beautiful, and she keeps good care of herself. And then they looked at me and say, "He looks like he's 60-something," and that's not her father. But anyway, it was quite interesting last night as our group expands and gets bigger. And a lot of those people, we're all over from here to the Bay Area. I don't see a lot of them in person except for once a year. So it was a good time. So for all the people that put that together at Comstock, nice job. Yeah, we did get a winner to our quiz question. Speaking of wine and cocktails, Yao Ming has started the Yao family. I missed the real name. He started a winery, or wine sales, I should say. He's importing wine into China. $289 is the average price per bottle. Price includes a 27% import duty and a 17% sales tax. So most of the wines that come into to China, and by the way, the wine consumption in China has doubled in the last 4 years, but most of it comes in from France. And so bringing stuff in from California is a real niche. And Yao, who spent, according to this article, a lot of time in California, obviously he played basketball and was in the area quite a bit, just thought California wines represented something the Chinese people would want to drink, and I hope he's right. $289 a bottle. I hope they either drink a lot or drink slow, one of the two. A little bit of other related business news. I don't know if you've caught any of this. And we're going to leave our text question out there. We've gotten a couple replies so far. Should we or should we not keep supporting the U.S. Postal Service? Should we let the Postal Service stand on its own, which means they can set their own pricing, they can set their own rules. If they make money, they keep it. If they lose money, they lose it. But the U.S. taxpayer stays out of the transaction entirely. What are your thoughts? We'll take that on as our text reply there, going for a little bit, 441140. You can text me yes or no. Should we stay in the business of supporting the U.S. Postal Service or not? If you're a postmaster or postal delivery person, I'm sure the answer is please. I don't know if you saw this. Anybody else out there watch? And I was never a big fan of The Office, the show The Office. Anybody else? I mean, I know everybody has watched The Office. I just never got into it, and I love all the guys that are on it. When you see them out, they're all separately hilarious. I just never watched the show. But in a weird world of reverse psychology here, Staples' online business is called Quill, Quill, Quill.com, has struck a licensing deal with NBC's parent company to launch a Dunder Mifflin brand of paper. So you can now buy the Dunder Mifflin brand of paper, Quabity first, and get your Scranton or their. But get this, and this is the logic behind it. Paper sales have gone down. It's about a $3 billion a year market right now, and they call it a race to the bottom because obviously as the economy slows down, people are doing less printing. We're doing more emailing, more PDF. We just don't use as much paper as we do. Remember, we're supposed to be a paperless society by now, by the way. That's what I was told a few years ago. But they are actually using this brand because they're going to market this paper at a higher price than you can buy the other papers. You're going to pay a premium for the the Dunder Mifflin brand of paper. So jump out and get that if you want to. That might mean more to you than it does to me. So I don't know if I get all that. So if you want to buy some Dunder Mifflin paper, give me a call, 339-1140. SUV sales are back up. We finally, I guess, are getting used to gas prices around $4 a gallon now because we are now buying more trucks, SUVs, than we're buying vehicles, at least in terms of a percentage. General Motors replied that their car sales were up 1%, their trucks were up 10%. Ford said their SUVs and trucks were up 26%, and Chrysler said they were up 29%. So I think we're just finally getting used to what gas prices look like, that $4 a gallon is probably going to be something near that's going to be a normal again. And quite frankly, I don't care how much you push on me an electric car that seats 1.5 people. If you've got a family of 4, 2 dogs in a boat, or you want to do something that requires more than going out and getting one bag of groceries with your recyclable Trader Joe's bag, you're going to need a vehicle that has some space. And the government keeps pushing on us 55 miles per gallon and pushing on us light-duty cars and battery this and battery that. And we keep buying what we want to buy. And you can see that you can depress the market for a little bit, but once we kind of get used to settling back to things, SUV sales are back up and way up. So I thought that was interesting. I'm getting out all my obscure things here. This is the company that we talked about this last week, Zynga, who produces all the games, the Farmville games and the you name it on Facebook. They are trying to go public, or talking about it. And I mentioned last week, I thought this is the part that just really irritated me. I thought was unfair, is that Zynga had, some of the people in Zynga had gone back to some of their early employees and asked them for their stock back. They wanted the stock back because they didn't feel that these employees were special enough to deserve getting, fairly rich if Zynga goes public. I thought that was unfair. If you got a stock option when you were there, then you should be able to keep it. If they go public, you should be rewarded like everybody else. But I guess some of the investors are looking at Zynga now and asking themselves, what does this company really do? What is their potential for really making money? And what happens if Facebook kicks them out? Because almost all their income comes from their association with Facebook. And don't you think if you were Facebook, and maybe they are, I know they do, you would want a big portion of Zynga? Hey, if you guys were going to play in our sand pit, we want half of Zynga, a quarter. We want half of all the money you make. They don't make a lot of money. This is a company that's going to make net profit was just about $30 million in the first 9 months of this year. And they're saying this company's worth $9 billion. They're going to make maybe $50 million a year. They're worth $9 billion. I don't think so. I think Zynga will be remarkably, they'll be like, who's the other one that just came out and the price went up and then went back down immediately? It was, Groupon. Yeah, Groupon came out, and I think today I have to look at their stock price is at or just below where they came out at. So people who've invested in Groupon lost money already. So I don't know. We'll see what Zynga does too. They can go to Farmville as far as I'm concerned. I could care less about Zynga. Got one on hold? Okay. Well, let's go to 339-1140 and 1-800-920-1140 if you want to jump on the line here. We got a couple lines open here. Yakking away, not looking at the screen there. Hey, Bon, are you there?
Yeah, I'm here.
Are you in a windstorm, Bon?
No, I'm Paul.
Okay, go ahead.
Yeah, I have a question. I had a rental property.
Okay.
It has two loans, first loan and second loan.
Okay.
It gone the foreclosure about 2 years back.
Yep.
First loan is not giving through, nothing else. The second loan, I think somebody buy it from them, and they are calling me again and again and again.
Okay.
So what should I do in this case?
Don't answer the phone. And Bon, I'm gonna let you take that on the air if you would, because I'm getting a lot of background noise, but I will answer your question there. Appreciate that very, very much. The question was, he had a rental house that went into foreclosure, had a first and a second on it. The first obviously got wiped out. The second, he thinks somebody picked it up and bought it, or as a collection agency, they're calling him for the money. And what should he do about the second? Well, if the house goes into foreclosure, technically both liens are wiped out. Now, they may continue to call you and ask you for money. They may not agree that they were wiped out, or the second sold the lien to him for pennies on the dollar, which is probably what's happening. He's getting called by some kind of collection agency. My understanding would be you don't have any obligation to them to pay it. And unless unless there was something else that we're not catching there. But I don't. If it was a true foreclosure, and the first foreclosed, let me think about that for a second. Yeah, it should wipe out all junior liens. And what usually happens in a normal process is if something's going to go into foreclosure and there's a second on it, usually the second will come in and pay the first, make sure that they're paid current, and the second will foreclose on you. So I don't know. I guess the question, Vaughn, is who foreclosed on you? If the first foreclosed on you, then the second's wiped out. If the second foreclosed on you, then they should have the property, right? And so they should that would be their compensation for the lien. So my guess is that they probably some collection agency got a hold of that, for pennies on the dollar or just in exchange for what they can get out of it. I don't think you owe them anything. It might be worth, just talking to an attorney or a bankruptcy attorney just to ask them if that's the same case as far as they're concerned. But I don't think you have any obligation to them at all, which doesn't mean they'll stop calling, but nonetheless. Okay, we got one more quiz question here, 339-1140, 1-800-920-1140. And I got some text lines. I'll read those during the break and get back to you on those, I promise. Here's my quiz question. This one is shocking to me because I'm not going to give it away. Okay, retail sales. This is throughout the year, not just Christmas, okay? Throughout the year. What percentage of all U.S. retail sales are e-commerce, online, any kind of rather than walking into a store, any kind of e-commerce sale? What percentage of all U.S. retail sales throughout the year, not just Christmas, is an e-commerce sale? We'll just take the closest to that. And that's not an easy question. 339-1140, 1-800-920-1140, or you can text us at 441140. My name is Jeff Tarbell. This is Talkin Money. We'll be right back.